Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Thursday, everybody. China's Xi Jinping and India's Modi had their first official meeting in 5 years, signalling an improvement in relations between the two neighboring nuclear powers. This meeting took place during the BRICS summit in Kazan, Russia, shortly after both countries announced a new agreement on managing patrols along their disputed border, where deadly clashes occurred 4 years ago. We covered this earlier in the week. Xi urged cooperation between China and India, describing them as major developing nations and key players in the global south, according to Chinese state-run media. He emphasized that the two nations should address their differences and work together to set an example for other developing countries, promoting a multipolar world and, quote, democratizing international relations, end quote. As we have seen in recent months, China has sought to present itself to the world as a champion of the so-called global south, the developing world. However, there is an awkwardness in many of its statements, in that it often ignores the role of India, arguably the biggest developing country in terms of population. For his part, Modi highlighted in a statement that stable and friendly relations between the two largest countries on earth would positively influence regional and global peace and prosperity. The recent agreement between the two countries relates to patrols along their nearly 3,500-kilometer disputed Himalayan border, the Line of Actual Control, LAC, where the 2020 clashes occurred. Following the 2020 conflict in eastern Ladakh's Galwan Valley, which left at least 24 soldiers dead, both sides increased troop presence and infrastructure along the border. India has insisted that normal relations with China can only resume once peace is fully restored at the LAC. India also noted that special representatives would soon meet to manage peace along the border and work toward a fair solution to the boundary dispute. However, details about the patrol agreement remain undisclosed, and some Indian analysts remain skeptical about the significance of the agreement. Last year, relations between the two countries hit a low point when Xi unexpectedly skipped the G20 summit in New Delhi, reportedly due to India's decision to hold preparatory meetings in disputed areas like Kashmir and Arunachal Pradesh, regions claimed by both China and Pakistan. Despite diplomatic tensions, China remains India's largest import partner, with India running a significant trade deficit. Some Indian officials are pushing to relax restrictions on Chinese investment and visas, believing this could boost India's ambitions to become a global manufacturing hub. Lin Minwang, a professor in Shanghai speaking to UK-based Reuters, argued that strong trade ties with China are essential for India's industrial growth, as China provides affordable goods necessary for manufacturing. Analysts view China's push for a multipolar world as a strategy to challenge US dominance and make space for its rise as a global superpower. As we have seen in previous episodes, Xi has used groups like BRICS to promote this alternative global order, despite including democracies like India and Brazil, which maintain good relations with the US. Next up, this week, Jason Douglas and Rebecca Fung of the Wall Street Journal published an excellent report titled "The $250 billion Rush to Get Money Out of China. Chinese residents worried about growth have been using everything from crypto to fine art to move their money overseas." The authors argue that in recent years, Chinese citizens have secretly transferred billions of dollars out of the country, evading strict government controls. This surge in capital flight is largely driven by a collapsing property market and growing economic uncertainty as people seek to safeguard their wealth abroad. Despite China's tough regulations that limit individuals to exchanging only $50,000 in foreign currency annually, many are using creative but illegal methods to bypass these restrictions, risking hefty fines and imprisonment if caught. The current wave of outflows, the piece argues, is significantly larger than during a previous property market slump in 2015 through 16, with estimates suggesting that up to $254 billion may have been illicitly moved out of China in the year leading up to June 2023. While the country's overall economy is much larger now, making capital flight a smaller proportion of the economy compared to a decade ago, the trend remains a major concern for Chinese authorities. It adds pressure on the yuan at a time when officials are trying to stabilize the currency, even as recent economic stimulus efforts have offered some support to China's stock markets and currency. This exodus of wealth, the authors argue, reflects diminishing confidence in China's economic trajectory, especially among those with the resources to move money offshore. Many investors, unhappy with dwindling opportunities within China, resort to methods such as overpaying for imports, shipping valuables overseas, or transferring cryptocurrency abroad via digital wallets. The reasons behind this capital flight are linked to the lingering effects of the COVID-19 pandemic, government crackdowns on the private sector, and a broader sense that China's rapid growth era is over. None of these will be particularly unfamiliar to regular viewers. Economic growth, once averaging around 7% annually, is now expected to slow to about 3% by the end of the decade, and that's if the economic transition is managed well. The country's real estate crash, estimated to have wiped out $18 trillion in household wealth since 2021, along with an aging workforce and ongoing tensions with the West, further compounds China's challenges. Despite efforts to crack down on illegal transfers, such as recent cases involving cryptocurrency schemes and shell companies, these outflows continue. Some individuals, the report writes, even use auctions and fine art as a means of moving money out of China, keeping the proceeds offshore in foreign currencies. Cryptocurrencies, while banned for trading in China, still offer a way for people to shift assets abroad. The data surrounding these capital movements are complex, as changes in how China calculates its balance of payments have obscured some outflows. Still, many economists believe that by adjusting the data to older methodologies, the scale of capital flight becomes clear again, with more than $200 billion believed to have left the country in the past year, even though China's State Administration of Foreign Exchange, SAFE, insists that these discrepancies are normal for large economies. Concerns about continued illicit outflows persist. Next up, we have one more development to cover, but just quickly, if you're getting some value from today's episode, don't forget to hit the like button. It's just me researching, writing, and recording these every day, open and free for all 6 days a week. And if you'd like to help me continue doing that, the best way is to keep the algorithm happy so this channel can be shown to new people. Liking, sharing, and subscribing is what makes that happen. Patreon and Buy Me a Coffee links are also in the description below if you think I'm doing a good job and you'd like to go that extra mile and help me keep the channel financially sustainable. Thank you so much. Okay, and finally for today, this week it was learned that VW, Volkswagen's chief marketing officer and head of product strategy for China, was deported from the country after being detained for about 10 days. He allegedly tested positive for drugs following a holiday abroad. UK-based The Financial Times reports, citing sources, that Volkswagen is reviewing the matter internally. The Volkswagen executive, who spent just over 2 years in China, had tested positive for cannabis and cocaine, both illegal in China, following his return from a holiday in Thailand about 2 weeks ago. We note that the alleged crime is having the substance in his body, not taking them in China. Cannabis is legal in Thailand. This deportation of a senior executive has several implications. As veteran China analyst Bill Bishop explains this week, quote, "This news has been going around the group chats for a few days. It is known that the PRC will sometimes test arrivals from Thailand for drugs. It does not matter if the drugs you took while outside of China are legal wherever you were. If you test positive while in the PRC, you will be in trouble. Given that marijuana is now legal in much of the US, PRC immigration could really cause problems for some arrivals from flights from the United States, especially from California. And if they decide to take a hair sample for testing, as Shanghai authorities have a history of doing in clubs, then any drug use from months before may come back to haunt you." End quote. As more countries legalize cannabis, China may need to re-examine these strict rules. But for now, even senior business figures who didn't consume them in China may still face deportation, or worse. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a great Thursday, and I will see you all tomorrow.